thank you for having us this afternoon. I'm Jeff Tweedy, CEO of Plant Healthcare. I'm joined by my compadre, Jeff Hovey, CFO, and we're going to walk you through our 2022 results. Just as an overview, Plant Healthcare is a company that's been around for a number of years. We're publicly traded on the AIM, and we sell biological products into the ag space to help growers farm more sustainable. Our products protect the crops from diseases and resulting in higher yield and quality. 2022 was a fantastic year for us. Our revenue was up 40% to $11.8 million, and gross margin increased 2 points to 61% across the entire product line. We have a couple of different technologies which we'll get into. Pre-Tech, which we call vaccines for plants. We had the first significant sales in 2022, and we have more launches of this technology planned in the coming years. We were successful in expanding our market reach into Brazil and Argentina, and next steps for us are India, France, the EU, and Uruguay. Our products deliver higher yield, which give a grower a higher return on investment, up to 14 times. As I mentioned, we have Pre-Tech. The other technology that we have is Harpin Alpha Beta. It's been around for several years, and our sales were up 36% this year, with revenues at $8.2 million. And we do this through growing through large distributors. So we have agreements with Nutrien, Wilburell's recently announced Novozymes, Agri, which is a UK-based distributor, and then Copacabana in Brazil. These are where our operations are today in the lighter blue, US, Mexico, parts of South America, Europe, South Africa, and then the darker or black color are our next countries that we expect expansion into. We just announced an agreement in India with Novozymes. Once Harpin's registered, Novozymes will distribute Harpin Alpha Beta for us into the sugarcane market, which is the second largest sugarcane market in the world. Jeff, I'll turn it over to you.
Over to me. Hello, everybody. Thanks for joining us. Jeff Hovey, CFO. As Jeff said, we had a great year, and I certainly want to thank all the PHC staff globally for making it happen. So let's dive into the numbers. As Jeff said, our revenue was $11.8 million, which is about 40% above 2021 levels. All regions, with the exception of our EMEA region, saw significant growth. The EMEA region was held back. Really two reasons. One, the drought that occurred in Spain in the first half of the year, and to a lesser extent, the currency fluctuations we saw between the euro and the dollar. So looking at our regions, North America was up approximately 75% as we saw increased sales into the specialty crop market in the Pacific Northwest, as well as into the corn market in the Midwestern portions of the United States. Sales into Brazil using our proprietary product H2 Copla saw a almost 50% increase as we saw continuing strong demand from sugarcane outgrowers. And we also had a full-scale launch of Stiori, which is a product we use on soybeans in Brazil, and that generated around $800,000. So if you look at H2 Copla and Stiori combined, revenue in Brazil was up over 100% from 2021. And finally, our Mexican business had a very good year as well. It was up 13% as we saw a rebound in the specialty crop markets, mostly affected by the COVID pandemic over the last couple of years. So turning to Harpin, as Jeff said, Harpin was up 36% to $8.2 million. Once again, North America and South America led the way. The 4-year compound annual growth rate with Harpin was an impressive 31%. So it's a fabulous product for us. Our gross margin increased 2% to 61%. Once again, that's due to the increase of Harpin sales into the Americas, which we define as North and South America, but also the launch of Sayori in Brazil, which is approximately an 80% margin product for us. We did see a potential margin issue with the supply chain issue that occurred in 2022, mainly in the first half. That kind of held back our margin by 1% or 2%, but I think that's kind of stabilized. So turning to cash operating expenses, cash operating expenses increased 11% to 10.7 as we saw a planned investment into launching our pre-tech products as well as growing the commercial business globally. Our adjusted EBITDA decreased 24% to 3.5 million, thanks largely in part to the increase in gross margin, offset by the additional cash operating expenses. And finally, our commercial business generated a $1.2 billion EBITDA, which is up over 200%. That's mainly because of the increase in margin of over $2 million, as well as investment of mainly people in sales and marketing, primarily in North and South America. So the company has done a really good job over the last 2 years in managing our working capital, which I'll get to a little more detail in the next slide. But to touch on a high level, the working capital as a percentage of sales has decreased to 20% year over year, and it's decreased 21% from 21. So turning to the balance sheet, you can see our inventory was 3.4 million, which is 1.2 million over last year. That's primarily because of second half purchases of Harpin that we did, which was just a strategic move to ensure we had enough supply to meet our growth projections for at least for the first half of 2023. We have fantastic relationships with our toll manufacturers. So with those relationships, as well as the inventory that we brought in at the end of 2022, we're very confident that we have enough supply to meet our demand, certainly well into 2024. Our receivables decreased 1.8 million to 1.8. That's primarily because of higher than expected collections in the fourth quarter for our second half sales. Over the last couple of years, our revenue spread has been weighted more towards about 40% for the first half and 60% towards the second half. This year, 2022, I'm happy to say we kind of evened it out a little bit more. It was about 47% the first half and 53% the second half. That's helped us bridge some of the cash flow issues we see during the year. Payables increased slightly to 3.1 million, and a couple of one-time payments to our suppliers, in particular with our Harpin purchase. Our borrowings is about 900,000. Most of that is the effects of IFRS 16. If you exclude the effects of that, our debt is around 250,000. So our debt is very, very small comparatively. Our cash burn was 3.5 million, which is $500,000 lower than last year, and I'll go into that in a little more detail. And our cash at the end of 22 was 5.7 million. So as I said, our cash used in operations was $500,000 lower, as we saw our lower adjusted EBITDA. Our working capital decreased 31% to 3.1 million. That's primarily because of the decrease in our trade receivables, and a little bit of increase in trade payables, offset by the inventory that I just mentioned that we would have taken in the second half of the year. We've also seen our working capital as a percentage of sales decrease substantially over the last 2 years. As a point of reference, in 2020, our working capital as a percentage of sales was over 100%. Obviously not good. In 2022, we now have it down to about 35%. So we've made significant improvements in our working capital. We're committed to that, and we expect that to continue for the foreseeable future. So based on our working capital, our projected profitability, we're very confident that we're going to be break even with within our existing cash reserves. Over to you.
Okay, thanks, Jeff. So just a bit of overview of the market. The biological market is really, think about it as in two segments. The biocontrol market, which is almost $12 billion, and biostimulant, which is about $4 billion. Both of these markets are growing double digit, and we play in both of these markets. There's significant markets and where the growth is at. And that's really driven by three factors. Climate change, as Jeff mentioned earlier, drought. We've seen drought every year since I've been in this company. So it happens somewhere in the world. Our products really help those crops overcome the drought. Food security, which is becoming more of an issue to make sure that people have ample food supply. And then sustainability. Consumers are demanding that we have more sustainable products in the market. So that's why we feel we're an excellent fit in both of these areas and the markets that we're playing in today. Next slide. So we have, think about our products, proprietary products, in kind of two buckets. Harpin, which is our existing business. We've been selling Harpin for a number of years in some of the key markets. It makes the plant healthier, resists disease and stress, resulting in higher yield and quality of crops, which is gives a grower a greater return on invested. We see in sugarcane a 14x return. In corn, we see an increase of at least 5% on corn, which is very substantial. And as Jeff mentioned, since 2019, Harpin's been growing at 31% a year. Our new technology, which we call Pre-Tech, or vaccines for plants, derived from these natural proteins. They're environmentally friendly, as Harpin is. They stimulate the growth of the plant, and they really target disease or nematodes, and we'll talk about those products in a minute. We launched Soybeans, our first product in Brazil in 2022 was the substantial sales, 800,000 in revenue in the first significant launch. We've submitted PHC 279 for additional crops in Brazil, sugarcane and coffee, rust, and then PHC 949 as well. And I'll talk more about that in a minute. And we have a pipeline of these. PHC 404, 414 biological stimulant products that we have that we could bring to the market as well. PHC 949 is our next platform to come to the market. And nematodes is a significant issue in agriculture today, row crops and specialty crops. They cause approximately $157 billion worth of crop losses a year. They're very significant size of market. It's about a $1.4 billion market for products that are used. A lot of products that are in this market today are very toxic, and we've lost several products over the past 10 years for nematode control due to the toxicity. Biological market is really growing. The bionematicide market is projected to be over 300 million by 2027. Just a few years ago, it was less than 50 million. So significant market, significant growth opportunities, and a very important pathogen to control in crops. So what does our product do? Our product is applied to the seed or as a foliar, and it helps the plant stimulate the natural defenses that prohibit the nematodes from feeding on the roots. We've demonstrated several years of efficacy data where we've got very good performance, even equivalent to the standard chemicals that are out there today. It works well as a foliar, as I said, or seed treatment, and can be used across the fruit and vegetable market as well as the row crop market. Our plans will be to launch in the third quarter of 2024 in the U.S. We have a partner, Wilbur Ellis, who is working very actively with us to develop this into the specialty crop market. And we've just submitted registration in first quarter of this year in Brazil, and we expect a registration within the year We have had a number of discussions with partners in Brazil, and we hope to have a partner signed up with us before the end of the year. So just a little bit on our distribution strategy before we go into each of the markets. Our distribution strategy is much different than some of our competitors. We work with large distributors who have significant access, and we work on an exclusive basis, so they have access to certain crops, certain brands within these markets. So in the U.S., we work with Wilbur Ellis and have since 2019. They've been a fantastic partner for us. Sales have grown very rapidly in the U.S. market, and they invest. They have over 680 salespeople that we work with. We have 4 in the U.S. today. Nutrien is a new agreement for us in Brazil. That's the seed treatment for soy. Nutrien has a significant presence in Brazil. They continue to make acquisitions, and they have a very large seed business today in the soybean market. Copacabana has been with us since 2018. They're our exclusive distributor in the sugarcane market in Brazil. Agri is a distributor for us in the UK. It's been a partner for a number of years, and there was actually a great article published in AgriPages this week talking about the use of Harpin on strawberries and reducing fungicide use by 58%. Ager is a new distributor for us in Argentina. They're going to be launching Harpin, or they launched Harpin last fall into Argentina, and we have pending registrations in Uruguay as well. Novozymes is our latest distributor. They have we have an exclusive arrangement with them to sell Harpin into the sugarcane market, and once the registration is received later this year, we anticipate it later this year, they will be entering the sugarcane market in India. So just a little bit on the geographic breakdown where we sell. We'll start in the U.S. We sell Harpin today in the U.S. through Wilbur Ellis, and also Brandt is one of our partners as well. We're really focused on row crops as well as the specialty crops, which would be citrus, fruits and vegetables, and tree crops. And we have new products that are new registrations that we expect in the coming months or coming weeks for PHC 279. We expect that any day now, and Wilbur Ellis will be launching that into the specialty crop market in the U.S., and then PHC 949 for nematode control. We think there's significant growth opportunities in the U.S. To expand Harpin, not only in the citrus market, but also as a seed treatment. Launch of PHC 279. We're evaluating that product in row crops as well for control of tar spot, and if that works, that will be a significant market for us. And then, as we mentioned, PHC 949 launch in 2025, $10 million opportunity, we believe, in the U.S. Turning to South America, our focus has really been in Brazil for a number of years with Harpin. Harpin sales have been growing very nicely in the sugarcane market, and we launched soy this year, so it's our new soybean market that we've entered into. We want to target coffee as well as we bring in new registrations for 279 and expand our crop usage. Our distributors today are Nutrien, Copacabana, and Ager. We think there's significant opportunities for growth in South America. We're Harpin on soybeans, which is being evaluated currently, soy into sugarcane and coffee for rust control, and then PHC 949 on soybeans. Nematodes is a significant issue in the row crop markets in Brazil because of the number of crops they plant per season. I just returned from there. They're harvesting the first crop of soybeans, and corn's meat was coming up right behind it. So a number of crops that go in, multiple crops go in the same year in these markets, which causes a lot of nematode issues. Turning to EMEA, it's one of our smaller markets, but we do very well in Spain, Portugal, and parts of South Africa. We've been selling Harpin there for a number of years. Potatoes, citrus, rice, and glasshouse crops have kind of been the focus. Moving forward, we just received registration last fall for Harpin in France, which will now open up the entire EU for us. And this will give us new markets to take Harpin into, again, with potatoes and specialty crops. And then we're very excited about the Novozymes agreement in India. I think that will be very substantial for us and significant growth that we expect in these areas in the coming years. We also launched a pre-tech product called Prezyme in January this year in Portugal with a distributor, EDAF. They're a very important distributor for us in Portugal. And there is strong interest from other distributors in that mixture as well. And we expect substantial growth in the next couple of years. And lastly, Mexico, as Jeff mentioned, Mexico had a challenging year in 2021, 2022, had very good growth. Mexico is a business we've been in for, 20 years, I guess. Really focused on the specialty crops, tomatoes, peppers, berries, and cucumbers. And those crops returned after the COVID, so more of a normal practice in the Sinaloa and Baja regions. We're really excited about some of these new crops, avocado, agave, and sugarcane. We're looking at Harpin use on those crops, and we expect substantial growth in the next couple of years in those new crops, as well as we're going to be submitting registrations for PHC 279 and 949 in Mexico later this year with a launch in 2025. Take about 18 months to get those registrations, and that could add a couple more $1 million of revenue to already a sizable Mexico business. So just as a summary, we're in the sustainability sector. It's growing about 16% annum. Obviously, our growth the last 2 years has been much higher than that, which is good. That's the targets that we've set for ourselves. We've invested a significant amount of money in the vaccines for plants, the pre-tech technology, and now we're reaping the benefits of that. Our target is to get to 30 million of sales by 2025. Obviously, the growth opportunities that we just reviewed add up to more than that, and that's on purpose. They won't all happen, but we believe that's where our focus is. That's where we're putting our resources and time and money. We'll get there because of our technology, but also our strong partnerships. Nutrien, Wilbur Ellis, and Agri are significant distributors. Nutrien's the largest distributor in the world, $15 billion. And these type of partnerships allow us to accelerate that growth and deliver on that growth year over year. So why invest? We're on track to deliver the 30 million. We have products that really fit the sustainability market, but they work. And we've proven they work year after year. We have unrivaled market access. We have very low cost of goods. And I didn't mention it earlier, but before we bring a product to market, we have a cost of goods target already delivered. So we don't wait 3, 4, 5 years into sales to achieve our cost of goods target. We have certain targets that we set before the product is launched. We believe that that separates us from our competitors and helps us generate cash much quicker for the business to invest. We had a strong launch of Sori, our new technology in Brazil. We expect major launches every year. We built on the strong performance of 2021 with 40% growth last year. Overall, 36 of that coming from Harpin. As Jeff mentioned earlier, we continue to work on our working capital and always looking to make improvements there. 2023 is off to a great start. I think it's positive, and we expect the same type of growth in 23, and we will reach cash positive within our existing reserves. So 2022 has been a great year. We're very excited about where we're headed and just excited about the technology. And thank you, and we'll turn it over for questions.
So Jeff, thank you very much. A very comprehensive presentation. And we've got a good number of questions here. So we're going to get started and hopefully we can fit most of them in before we finish. So there's two questions here. Thank you very much from Alan and Jim, which do relate to the 30 million revenue target by 2025. So there's two questions here. One from Jim's really asking about the timing of this revenue. When we're looking at by 2025, Jim asks, is that the end of the 2024 financial year or is that the 2025 financial year? So that's one question. And the other question here from Alan's talking about the targets and what are any potential risks that you see that could derail your journey towards that target?
So two very good questions. First, the 2025 means the end of 25, so it'll be our 25 financial year. On the second question, the risk, I think there's two. We ask what keeps us awake at night. So that's always a question we get. I think there's a couple of things that keep us awake. Weather is one that you can't predict, and you're going to have a weather event somewhere in the world. So what we have been very active to do is to spread our risk around the globe and get our technology in different regions. So you take that risk off the table. I think the one that's out of our control, and it's probably in the US, it's probably as tough as any, is the regulatory risk. I can probably predict or feel more comfortable about achieving a registration in Brazil, which I wouldn't have said a couple of years ago, than I would in the US. I think the US is so unpredictable right now. They're so far behind, understaffed. There's the people in EPA are still working from home. They haven't returned to the office after 3 years. So I think that risk for us is the one that is out of our hands, really, and one that could derail it if we didn't achieve some of these registrations.
Thank you. So we've got a couple of questions here from Mark, which are really talking about the individual products. So the first one relates to pre-tech, and it's a question about the production techniques as well as the products, and which one of those two are going to be patented, or are they both going to have a patent attached to them?
On the production, the question is a production patent?
The production techniques as well as the product. So there's the production technique and then the product separately. Will the production technique have a patent attached to it as well as the product?
Understood. We have filed for over 50 patents around related to pre-tech and those technologies globally, and those are use patents. I believe now we're up to 15 have been granted worldwide. So we have very strong IP around pre-tech itself. The production side of it, we will not patent. We will do that under trade secret. And the reason is as soon as you publish a patent, then somebody can do a workaround. Whereas a trade secret, we feel it would be much easier for us to protect the IP. We feel strong about our relationships. The other thing that I would say around the manufacturing is it's not a normal fermentation. It takes a specialty fermentation to do this as well as drying. So there's not that many places around the globe that do it. And we have strong partnerships with our production partners today. It's very collaborative, and they work with us to ensure that we have efficiency. We have the agreement set up in a way where it's beneficial for them to have higher production output, which benefits us and them.
Thank you very much. So the next question relates to PHC 29 being used for soybean. And Mark asks, do you use the same product for the soybean, sugarcane, fruits, row crops? And how do you tweak the product according to the crop?
Good question. So the PHC 279, or the brand name Saori in Brazil, is the same product that we will sell in the US. So there's no tweaking of the product itself. What is different is how it's used by different crops for the disease that you're targeting. So for example, in soybeans, we apply it as a seed treatment in soybeans for Asian rust control. The reason we do that is because it turns, the peptides turn on the natural mechanisms within the plant that allow it to protect itself. If you apply it foliar and it's too late, where the disease has already infected the plant, then it's not going to work as well. And we've seen very good results there. Similar to sugarcane, it is applied to sugarcane foliar, but it's done before the disease actually infects the plant. So we don't tweak the product itself, but we do change the timing of the application based on the crop and the target pest.
Thank you very much. So another question here, and this relates to nematodes, of course, parasites feeding on the root cells and their needle-like mouthparts damaging the plant. This is a technical question. How does PHC 949 stop this from happening?
Great question. So the way that it works is very similar to other peptides. When PHC 949 is applied to the plant, it turns on a mechanism within the plant that exudes a chemical, a natural chemical that's in the roots, and that root or that chemical stops the nematode from feeding on the roots. Once it stops, they die because they have no food source. The other thing that happens with nematodes is that you'll get feeding, which will reduce the roots, but you also get, when there is feeding on the roots, you get diseases that will be introduced that further infects the plant. So we stop both of those from happening, but it inhibits it from naturally by the product that's in the plant itself, exuded from the roots.
Thank you. So this is a question that I've got for speaking to somebody very recently. And of course, we've got the forecast up to 2025, but it would be interesting to hear your views on what this market looks like past then, because of course, by 2050, we're expected to have a huge growth in the world's population. So do you have any visibility on where this market may go as we move towards that milestone there?
Yeah, I mean, we believe that the market, and I think those experts that look at the biologicals will continue double-digit growth. I think what's holding some of it back today is the scalability of these companies. A lot of companies are similar size to us, or maybe half our size. They don't have market access, and so we do think that there will be consolidation that will happen. And that will help drive further access and bringing these products to market, because scalability is what's really important. And that's what we focused on. We focused on market access as well as our technology, bringing it to these markets to achieve that scalability in each of the core markets. So I think it will continue, and I believe that you will continue to see products on the traditional chemical side, agrochemical side, be phased out due to toxicity, and that's where our products will fit very nicely as replacements for those products.
Thank you very much. So just one final question here, and it's really about the geographies that you're operating in and targeting. Are there any particular markets that you're looking at that you're not already operating in that you'd like to get into? Yeah,
there is. It's a focus for us. We've actually identified several. I think Central America would be a market. Obviously, India, we've announced. China would be a market. With our registrations in France, opens up the entire EU market. So we're working on plans to enter those markets once registrations are achieved in each country. Chile would be a very interesting market for us to enter as well. They have very similar crops that we have in some of these other geographies. Paraguay would be another one. Paraguay has a very similar soybean cropping rotation to Brazil. So I think a number of crops around the world, or another number of markets around the world that we would like to enter, and we're looking at all of those, and have ongoing discussions with partners at various stages in each of those.